joined by Paul Curbo, investment manager with Invesco. Paul, can you tell us about your views on REITs internal funds? Do you see a potential revival here?
Well, we're coming out of a period where REITs were trying to grow their funds management business as a way to preserve capital on their balance sheet, as a way to access additional capital, and as a way to grow earnings through ROE type increasing investments. Because when you layered in the fund management fees on top of the investments they were making, they could prove very accretive. I think we're coming from a period now where the past 2 years commercial real estate prices have fallen. I think there's greater scrutiny from investors on some of the investments that were made by the REITs. So I think we're going to come back to a time where it's going to be more fundamentally driven. I think some of those REIT managers that can offer funds where they have a specialty expertise, perhaps a redevelopment capability, perhaps more hands-on asset management, I think they'll still be able to attract both joint venture dollars and institutional fund dollars. I think we're out of the environment where an average or below average operator can collect funds from institutional investors and grow their platform if they can add something unique.
And you mentioned institutional investors. Do you think that they're ready to move back into REITs after the latest sell-off?
Well, I think they are, and I think they have been. If you think about it from our perspective, institutional investors have really remained committed to the asset class during this downturn. They've been following their strategic allocation and rebalancing to the sector. We've seen from our perspective, our major clients have been doing that this year. During the big downturn, they added more to the sector. If you look at the REIT sector in terms of its equity capital raisings this year, that's been supported by institutional investors. So I think that says positive things about the sector. I think long term, when they look at the sector overall, they see transparency, they see liquidity, they see REITs with multiple forms of access to capital, and so those are very positive attributes.
And what kind of lessons did these institutional investors learn from their experiences with opportunity funds?
I think that risk matters. I think that debt matters. I think the nature of the debt, the level of the debt. I think when a lot of these funds were created, they were promised, investors were promised high returns, and I think many of the managers had track records of delivering high returns. But you got to look at the environment that we were in that period. You were able to access high levels of debt at very low costs, and asset values were rising. I think going forward, I think many lessons have been learned, and I think more of the focus is going to be on what can the manager do in terms of creating value at the asset level. What can they do from a structuring perspective to create value, as opposed to just layering on excessive levels of leverage at very cheap costs and producing returns. I think investors are going to be more focused on the risks they're going to be taking in order to generate the returns going forward.
As an investment manager, what do you see as being some of the key potential areas for growth going forward?
I think in today's environment, we're looking at a relatively lackluster job creation type environment. So we're not going to be as dependent upon sectors that need job growth in order to generate earnings growth. So we're going to be more focused on some of the niche sectors that can generate earnings growth or generate bottom line growth and not be reliant upon job growth. So those would be sectors like student housing, those would be sectors like technology-focused real estate companies, things that have their own unique demand drivers and are not going to be as reliant upon the overall economy.
Thank you very much for your time, Paul.
Thank you.
For more information on this and other REIT news and analysis, check out REIT.com.